Good morning, everybody. April 7th, and it's Tuesday, which means it's a taco type of day, if you know the reference, or maybe not. We're going to find out. This is just what we're going to do now. We're just going to hang out, and we're going to wait, I guess, 9 hours to try to find out what the H is happening. Yes, welcome to Tuesday's Morning BRRR. Forget the deadline for a second. The real story this morning's a little bit bigger. Hedge funds got absolutely body bagged in March. We're going to talk a little bit about that. A number of these funds getting beaten up. Insiders had been buying at the end of March, and we have multiple strategists calling the bottom for Monday of this week and the end of last week. So we'll talk about that. SpaceX confirming its IPO roadshow, looking good for June 8th. Anthropic just told the world of that a $30 billion run rate and locked in 3.5 gigawatts of TPU capacity from Google through Broadcom. Yippee! And yeah, we have that 8 p.m. deadline tonight. So let's dig in. Let's just get after it. Let's be about it. Whatever you got. Here are the numbers right now as we start the morning. 66.21. We're down 29 points on the S&P 500. Dow's off about, 200 points. NASDAQ's down, Russell's down. Interestingly enough, our signal in recent days, Russell flipping positive. We've seen that little bit of that squeeze yesterday. And remember, we're based on a weekly and monthly run rate. So we have a weekly number that is positive. We have a monthly number that is extremely negative. The S&P 500 kind of hanging out, sitting in yellow territory as well. So not a lot of conviction right now in this market. This is not a constructive open. The hedge fund unwind plus this deadline is pulling everything lower in the bell. WTI up this morning 2%. Brent adding about 1%. Yep, Brent is up too. Both crudes are on bid into the deadline. There's no soothing curve story today. Heating oil's up. Gold's up. Silver's down. Oh, gold's down. Forgive me. Gold was up for a moment, down for now. Silver down 1%, platinum same thing. Dollar adding, and Bitcoin basically staying in this range of 67,000 to 70,000. And I continue to argue a lot of that has to do with support from passive flows. We saw actually surprising amount of passive flows pick up last week. There you go. 10 years sitting around 435. All right, key thing, as we know, this is actually the bigger story. So we're going to try not to have the war be the front page story, but we are setting up for the largest IPO of the decade. SpaceX has met with bankers. They met Monday night, according to Reuters. The roadshow will kick off on June 8th, and a massive portion of the shares are being allocated to retail investors. They're hosting 1,500 retail investors at a June event. And this is Musk doing what he did with Tesla back in 2010, making sure that retail is on the deal from day one. Why does all of this matter? Well, this is bigger than ARM. It's bigger than the Aramco free float in real terms. And this is going to pull oxygen out of every other AI and space play between now and the summer. It is an important story to consider the size of this IPO and the amount of capital that may be allocated toward it and what is not going to other places, including maybe the Mag 7. This also resets the entire secondary calendar, and the retail allocation is the part most desks are sleeping on. It changes the demand profile a little bit. Start mapping which growth names will get sold to fund SpaceX between May and July, and we'll be talking about this. This can be, if we move into the next cycle, the next capital cycle, space stocks, things beyond AI may very well be that next thematic story. There are funds that are built around some of this stuff. A lot of ETFs are starting to pop up. Even looking at some of the things that Kathy Wood is doing, we will pay very close attention to that. We'll drill down deeper into that. Ooh, look, a deer. That's on my property. That's a female. Oh, well. All right, let's talk about hedge funds. Smart money got carried out in Q1. Tiger Global main fund dropped 7.3%. Maverick down 5%. I can't pronounce that. We're down 4.8%, and Viking 4.1%. These are the most respected long short stock pickers on earth. Quatois. I'm going to just call you Quatois. Oh, there's 4 deer now. Oh, this is very exciting. I'm going to learn how to say that word. I don't know how to say a lot of words that look confusing to me. So I'm going to go with that. And I'm also just going to say I don't know how to say a lot of words. What broke them? Well, the Iran war broke these funds, and their crowded growth books, margin-driven unwinds also turned into reflexive selling. My dogs do not like those deer. They're barking downstairs. This was the worst monthly print for these names in years. Nothing shocking on the backside of the liquidity cycle. And this is exactly why snapback rallies have been so violent. When concentrated long shorts get carried out, the tape moves on technicals, not on fundamentals. And I want to point that out. That's one of the reasons why we're seeing our signal kind of behave the way it is. It's snapping back very, very quickly. This can roll over just as quickly as well. On the insider buying to selling in file listings, we saw a pop at the top of March 31st, a big end of quarter side of purchasing. And we're pulling from the Form 4 sites, looking at insider buying to selling, the 5-day moving average. It had crossed back above its 22-day moving average on filings, not in real dollars buying to selling, but in the number of filings that are being done with the SEC, happening right at the end of March and through February and most of March. Most of the insiders were net sellers. This was just a couple of days, but remember, insiders almost always buy too early, and they almost buy near the bottom. This aligns with some of the statements that have been made by HSBC's Max Kettner, the first proper buy signal since the Liberation Day episode. He is saying it's been interesting the last couple of days to see the snapback, plus our move on our Russell 2000 reading. Again, the weekly numbers have improved. Healthcare stocks have really lifted this thing off. And if the United States pulls away, this is one of those environments where we have said a move to 670 on the S&P 500 SPDR ETF is in order. Yardeni research saying Monday was the bottom. Yardeni is holding an S&P 500 target for the end of the year at 7,700. I do find that to be a little bit aggressive, given the fact that I'm not seeing the monetary policy response that I think is necessary to drive that higher. But the fact is, 2 bonds who are turning constructive, 1 insider chart that has just inflected, 4 hedge funds that got carried out. That has been, in past, a bit of a short-term bottom setup. Doesn't mean that we're not looking at weakness on the backside of the year. Obviously, there are other issues, but I'm paying attention to what Yardeni and Kettner are saying. I'm listening to what the insider tape is telling me as well. And once again, it typically doesn't always go completely black right when it gets the darkest. So looking for a bit of a snapback rally. Again, we've talked about watching these key moving average levels. We're at the SPY right now, sitting around that 20-day moving average. That's a critical line in the sand. Pull up the SPXL. Once again, SPXL approached its 20-day moving average. If it cannot hit it and stay there, that's where the downside remains. That's what we've seen with that 1% pattern in the past, where we pulled down, popped, hit the 20-day, and rolled back over. We need to get back above that key moving average. On the FNGD, sitting right there at its 20-day. If it moves back above its 20 and its 8, we do have problems. If the trend continues to fade, FNGG is showcasing momentum potentially coming back into this market. We are sitting right below that 20-day simple moving average. That's the key line in the sand, and the market needs to make a decision. Hopefully, we'll make one in the next 24 hours, but that is the bullish case that I've just laid through. All the bearish case, you've seen that pattern before. You've seen the moves back to the 20-day moving average, a little bit of positive momentum, signal right at that yellow level, and then we snap back lower. So we're on alert. We're just going to continue to just follow what the trends tell us. We're going to look at what's going on with volume weighted average price, and we're going to look for direction, hopefully, within the next 48 hours. On top of this, we have Anthropic resetting the CapEx curve. Run rate on revenue, $30 billion. That's up from $9 billion at the end of 2025. That's a 3.3x move in a single quarter. 3.5 gigawatts of next-gen Google TPUs have been locked in via Broadcom starting in 2027. That's on top of about a 1 gigawatt already being supplied this year. The CFO has called it our most significant compute commitment to date. And it is, again, validating all of the things that we are looking for from every hyperscaler CapEx number that Wall Street has called unsustainable. We had estimates that Broadcom would pick up about $21 billion in AI revenue from Anthropic in 2026, $42 billion in 2027, and that's all from one customer. So remember, most of this new capacity is sited in the U.S. That's power, fiber, water, real estate, small modular nuclear, all of it. We've talked about Texas Pacific Land being a company that is tuned into this. We talked about the pipeline companies that have to provide all of the natural gas, the energy transfers of the world, the names that are in the midstream that are going to continue to move the natural gas toward these facilities. Coal is looking solid. Coal continues to look strong. There's a number of coal producers, companies that are moving coal through supply chains that are paying double digits. This is a renaissance. And yes, there are concerns about valuations in the market and the fact that, yes, I did write the Hedge of Tomorrow report that I just put out for readers of Money Printer Pro and Postcards from the Edge of the World. But the reality is this, and this is very important. There are choke points in the economy that are going to kick off cash right now that cannot be printed away. And when we do get into the backside of this cycle and then we start to see some sort of accommodation, and I'm saying it's going to come because it always comes, at that point, those scarce choke point assets are going to be repriced to the upside, and they still maintain that cash flow that they are kicking out. They are the toll booths of this AI boom. And that remains the way to play this. You don't have to chase the companies with extraordinary price to earnings ratios. Focus on the companies that are providing the ongoing push to this. Don't focus on the unsustainable hyperscaler numbers. Focus on the companies that are providing rent to those companies, the companies that are providing land to those companies, the companies that they have to rely on to ensure that they have that electricity capacity in the future. All right, I said all that to get to the main event, and this is the main event, of course. Iran has rejected a 45-day ceasefire. Trump has called the counterproposal not good enough, but also called it a, quote, significant step. The deadline has been pushed to 8 p.m. today because why not? Maybe we'll just say it's 8 p.m. in Hawaii at this point. We'll just keep moving it back. Trump's all caps open the bleeping straight came the other day. He threatened every bridge in Iran by 12 o'clock tomorrow night and every power plant burning and never used again. Okay. On the other side, Trump said on Easter, the Americans want us to come home, and that's a real shift in tone. Vital Knowledge saying the full deal won't happen, but probably no scorched earth campaign tonight either. And the Wall Street Journal reporting officials are not optimistic on a deal by the deadline. So what happens? Well, you're looking at it. Israel hit South Pars Petrochemical, which is about half of Iran's petchem capacity at risk moving forward. Sharif University was struck, which is considered the MIT of Iran. The head of the IRGC intelligence has been killed. Iranian missiles killed 4, hitting a residential complex in Israel. And the U.S. CSAR pulled 2 airmen out of Iran recently, which Trump called historic. There is no end game to this at the moment, it seems. And once again, I've said multiple times, in the world of game theory, the projects that we did when I was in graduate school and we were analyzing global security risk, Iran was in all of the games constantly the player that hit no over and over and over again. It was not in the way that we were told by our professors was don't play the game rationally. Just keep saying no. Even in the face of concessions, keep saying no. That has kind of been the way that this situation has operated since the late 1970s. So, this is a very difficult situation. Obviously, we're going to see some radical adjustments, but my focus on this remains the same. It's not about trying to predict what is going to happen. It really needs to be about understanding the outcomes of whatever happens. What are the scenarios in play right now moving forward? Well, first off, food prices are moving higher. They're going to move higher at the end of the year regardless. Fertilizer prices are going to remain elevated for the time being, and you're going to see a significant amount of CapEx likely injected into the West in refineries, petrochemical facilities, and other things that need to be replaced in the Middle East. A lot of investors here in the U.S. who might have that exposure, or places like Canada or anywhere in the West that would have exposure to the Gulf Coast states, are going to have to reassess their political risk. So therefore, consider the fact that U.S. pipelines don't have political risk compared to some of the more traditional passages of other organizations and businesses or shipping companies that are moving out of the strait. WTI is currently sitting at 114, Brent's at 110. Both are going to likely be bid into this deadline. We're seeing gasoline increasing, heating oil increasing, nat gas increasing. And if 8 p.m. fails, we're going to see a repricing across the curve. The big question is it the front of the curve that goes down, or is it the back end of the curve that goes up? We're seeing a very significant premium right now for Saudi Arabian crude, and officials are not obviously optimistic about this deadline. This is a longer show, so let's just talk real quick about this. Health insurance, CMS finalized the 2027 Medicare Advantage rate at 2.5%. It was originally proposed at flat. That's about $13 billion more in payments to this industry. So it's not shocking that Humana is up 11%, United up 9%, CVS Health up 6%, Elevance up 6%, and Centene up 4%. Watch how the group trades into the close. If Humana fades from 11% to about 5%, the Bears are going to press on this hard tomorrow. In other moves, CMG, this is a name that I had talked, or UMG, a name that I had talked about a while back. High F score, low gram number, cheap. Well, Pershing Square, Bill Ackman Group, offering 55.8 billion euros, $64 billion for the company. Royalty rights, everybody. It's all about royalty rights. 78% premium to the April 2nd close. Cash plus shares of a newly listed NYSE entity. Mike Ovitz would be proposed as chairman. UMG is up 10% in Amsterdam today. Apple sliding a little bit. Foldable slips. Nikkei reporting that Apple's first foldable iPhone hit engineering test issues. Mass production and shipments could slip months. In the worst case scenario, Apple's down a little bit. Casey's General Score will join the S&P 500 April 9th, placing Hologic. Very important thing to note on this. Great company, CASY. A lot of these companies in the grocery space are seeing bids, obviously, because of the war. Pay very close attention to Grocery Outlet. The ticker is GO. Significant amounts of insider buying down around that $566 level. The stock has moved back up above $7. Very cheap company. Companies like Walmart, companies like Village Supermarket, all of them should be in focus right now. The margins are slim, but once again, the discount model for food currently looking like the winner out of this war. Levi Strauss will print after the bell today. The call is at 5 p.m. All right, finally on Asia today, very important to note, Nikkei had cracked down about 1%. Hong Kong and Shanghai closed for the holiday. The DAX was up, the euros were up, and the Nikkei is the tell. Japan trades the deadline first. Keep this in mind. Today, we have durable goods at 8:30. Expectations for a 1% decline on the headline, 0.5% on the core. Consumer credit comes out at 3 o'clock. Levi at 4. And that deadline, 8 p.m. Eastern on Iran. That is allegedly the line in the sand. We will see what comes next. Core things to watch. Insiders are stepping back in as buyers. Yardeni and HSBC saying the bottom was Monday. Hedge funds carried out, but the contrast is the whole stories. Watch the long end and the small caps. Watch those key moving averages that I discussed, the 20 and the 50-day EMA and the 20 and the 8 SMA. The SpaceX capital pool is going to be a big story for the next couple of weeks. We're going to start to look at who could be the losers out of all of this. And of course, the 8 p.m. deadline. Don't stay up too late. Be like Tony Kornheiser and go to bed at 7:30. Money Printer Pro is available every day. You get access to our signals. We get access to our deep dive into all of the S&P 500 and Russell 2000 stocks, our triples breakdown, and our option profit calculator. You can join for this special discount that is offered in the email below. I hope everybody has a great trading day. I'm going to go comb my hair and get myself together. I hope you enjoy your Tuesday. Stay positive.